Bloody futures lead to a bloody Monday on the market. Will the recovery continue? What are we looking for the rest of the week into the end of the year? And did Biden eat all of Santa's cookies? Joe Manchin shot down the Build Back Better plan. And you know what's funny about this is I had so much fun watching people on social medias and on TikToks or whatnot just completely butcher that man's name. I had no idea there were so many ways to spell it. So that was really fun. But he shot down the Build Back Better plan. Some arbitrary reasons why that I could probably go on for a full hour on why they're nonsensical. It's the same issues that lead to the student loan debt crisis are being played out here, where it's like, well, yeah, drug company will charge 1,000% more for a drug if you front the bill, and you're not fronting the bill because you don't have money. You take the money for the American people and let the drug companies charge exponentially more for it, and then you say, we covered it. It's like, no, I covered it, and you did nothing to try and make sure that it wasn't getting literally robbed. So that's what's actually going on. So he was upset because he doesn't want child tax credits. He said he wants to help people pay for, medicine, different medicines, which, sounds nice. But like I just said, help people pay for their medicine, also known as tax people a ton and then let the drug companies get rich and then complain about how you need to tax the rich. It's like, well, they got stupid rich because you. So a frustrating thing that constantly occurs. So we'll have to see what the solution is here. He's going against them. Biden said he wasn't going to put out an executive order and turn it down. Will there be some sort of resolution? They need to get this out. They need to get it done. But they, it's not going to be perfect. Hopefully it doesn't need to be perfect. But, there's a lot of debate on it as well. It was priced into the GDP. Remember, in a video like before leading into this week, I said that I thought that the 4% GDP estimates were probably a little high. As soon as this bill got shot down, a bunch of banks were reiterating that they had downgraded their GDP estimates, and that should have been probably expected. In hindsight, I should have probably seen that coming because I had my suspicions. That delayed reaction, the fact that the bill had to be shot down for them to lower the GDP estimates is a little suspect. I would think that they would likely have done that anyways, but maybe there wasn't enough clarification, and when that came out, they decided to drop it. Maybe they had to buy their puts first. So that occurred, though. That's weighing on the markets. There's a few different things that could factor into that. There's also some fears about the extended supply chain issues. There's so much to consider with that. I was getting caught up on some innovation tech conferences that were held in November. And those were really cool. There was a lot of automated manufacturing that's being just revolutionized. They're really getting places with it. Into small, medium-sized warehouses, because the large ones, the big tech companies, if they need them, I shouldn't even say tech companies, like Amazon, already has their automated factory. Same with Tesla, so they can make their own, but there's now different entry points for small to medium businesses. There's different suppliers that they can go to for the machinery. As if Biden actually now Biden wants to raise labor wages and to bring more people to that market. Now it might help, or it might push companies to realize that they save even more money, since it's more expensive to hire people to go to these innovative technologies, whether it's like AI for insurance, or it's automated manufacturing, or it's different self-driving vehicles, or drone delivery, whatever that may be. And whatever it may be is probably way less annoying than whatever is in my eye. So the issue is, if you raise wages, then you're more likely to push companies into innovation, just like when they just like why companies will outsource to other countries for production, they'll find different alternatives to work around whatever you're doing, which is also a major issue with, raising domestic corporate taxes, because then they just move their headquarters out of the country. And so this is all different issues that haven't been resolved. So when they try to do something good, they end up doing nothing good, because they're only thinking about fixes, and they're thinking about creating solutions rather than exchanging different sets of problems, which is something that every politician should be the only way they think, is about exchanging different sets of problems. And I think almost, maybe 25% do. So it's very frustrating. But, and with the Build Back Better plan, same thing. So we'll see. It doesn't have to be perfect. Maybe they need to work something out. This will probably likely bring more validity to the quote of there's nothing more permanent than a temporary government program, because this will probably last forever. And so, there's lots of debate over the math. I think there's lots of debate about how much it would have helped, and about how good the math was, and how good the estimate is. And let's just be perfectly clear. In my opinion, without a doubt, it's complete nonsense. Predictions 10 years out are going to be wrong. So they're going to be wrong. If you're trying to measure anything specific, like a budget, or you don't know what's going to happen. You don't know if there's some major cyber attack. You don't know if the entire financial system gets displaced 5 years by Bitcoin, and then runs rampage through everything that you're going through. You don't know what's going to happen with the energy crisis. You don't know if there's going to be an invasion. You don't know. No, nonsensical. Planning anything 10 years out, nonsensical. If we continue to print money, and because the total package, I think, was 1.7 trillion. But you have to remember, this is distributed over 10 years. And that distribution over 10 years is just going to, it says trickle. If we continue to have persistent inflation, but you're putting out the same amount every year, you're going to be doing less and less and less and less every single year. So you're going to have to do revisions to it, which likely then goes forever. And that's how you get a permanent temporary program. That's something to consider. So, and with that, then the banks came out. They lowered GDP estimates. I thought the 4% by the Federal Reserve was a little high anyways. And when you look at what the market's pricing in for the rate of the decline in inflation that the market perceives will occur over 2022 is a lot slower than the Fed's estimates. The Fed is very positive in their sentiment of how this will go, and the Federal Reserve, I think, has been consistently wrong for, I want to say, 22 months now. So maybe that needs a grain of salt. Maybe the markets or maybe they're both wrong. I feel like this is increasingly getting more and more complex, this game that's playing out, and I kind of like it because it keeps me engaged. I think this is kind of disconnected from the fact that there's a real world. I mean, just to be honest, it's kind of like a disconnect because I'm just trying to solve puzzles when I'm analyzing through the different supply chain things. And I don't think I'll do a full video on supply chain issues. Maybe I will about uranium specifically, just because I study it so much. Just as one example of how it'd be probably the best example of how complex supply chains can get. But one of the things to consider is that there hasn't been I'll cover two things with the supply chains real quick, because this is going to play into everything else, and it also is probably the part of the virus in the last episode that I didn't really cover. Two things with the supply chain issues. One is the direct to customer business model. um, creates really inefficient supply chains that are all about capital efficiency. And the second one's super related to that, but it's the lack of investment in supply chains. That's a huge issue. And these companies that run these supply chains are not the ones that investors have chosen to allocate capital to, so they haven't had the same amount of cash reserves that you would, or I should probably could have phrased it differently. They don't have the same amount of access to capital because of a lack of investment, because everyone's chasing innovation stocks. So what happens is these companies can't allocate as much money as they would like to better improve the methodology of the supply chains. But there's also been such a long extended period of time without issues to supply chains that it was a complete shock to the system and was really prepared for it. So, the goal with a lot of the things going on is to bring more production back to the U.S., incentivize some better supply chains, or make them domestic so they're not as bad. And of course, there's going to be certain materials where this doesn't work. One of those is like lithium. There's a huge race for lithium because of electric vehicles. Lithium will most likely play a large part in different infrastructure changes that are being considered right now. One being like the bus-sized batteries that they want to put in all the cities, to make up for the fact that when hydrogen or solar power fails because it's inconsistent, those batteries then take over. I think we've talked about this before, but so you still need some of that outside resource and supply chains to support it, and they need to be improved. And then the real solution is to actually put proper allocation into improving that, and that's what the Build Back Better plan is supposed to do. And those things should then help GDP, as well as the actual stimulus will help GDP, will inflate GDP is how I should say it, and that is the lack of these being properly fixed is what is causing the markets and banks to have a different outlook than the Federal Reserve. And when it comes to the estimation of those things, I think it's always better to trust the markets. Markets probably have a better tab on it. I even have personally, as more CEOs become increasingly are offering more commentary on the markets in the economy than they usually do, and I've been trying to keep a close ear to those because, and there's also a report that was put out at the end of November. They have 45 days to respond to, and that was asking 9 companies to report on supply chain issues. So I'll be definitely listening to what those teams have to say, those corporate teams have to say as well, because I don't think that the government has any sort of barometer on any of this. And in fact, they've been caught, skewing supply numbers, especially with ships off the coast of California, just manipulating not manipulating anything, but just plain loopholes on how those supplies are ledgered or tracked. Holy cow, that was a mental fog I had to creep through there. So there's all that to consider that's going on. And when things are really bearish, I try to tweet out bullish things and take the other, see what's on the other side of the fence. When I see people really, really ultra bearish, I always am like, okay, are we getting horizon effect? When things are red and they look bad, people stop thinking about the future. But when things are good, everyone's thinking 10 years from now, 20 years from now. But when the market's red, suddenly they're only thinking about 4 months from now. But like I said earlier when I was analyzing the Build Back Better plan, 10 years from now, you don't know. But we do know that historically, things tend to improve over time, and the longer you go out, the more deflationary pressures you have, and the more crises you have, which is something else to keep in mind. But solutions are arising, which brings us to something else I wanted to touch on. Last thing, we'll finish with something a little more positive. Well, I guess I should cover the positive things. Passive markets always go up. We've been having that since the invention of 401ks and Roth IRAs. Different Vanguard products. These cause passive markets to slowly go up. The other bullish thing, if any of these negative things happened, they could all lead to different routes with more Federal Reserve support or more governmental support, which will then act as additional stimulus. Now, there's all sorts of scenarios and different routes you can take, but you need to consider that if the Federal Reserve decides to keep rates low, or if they decide, oh no, we need more stimulus, there's a lot of argument on whether they can even increase rates or whether they can even have more stimulus or, et cetera, et cetera. The list goes on. There's also needs to be considered, like, how fast does this technology move? How fast will supply chains get fixed? I tend to think that when it comes to how fast we'll fix supply chains, I assume it'll be faster than everyone else. And when people are worried about us losing the value of the American dollar, it's because they're usually not looking around at the rest of the world, who's struggling a ton. And considering that free markets usually are the fastest markets, and they're pretty efficient, I think despite the negative perspectives, I think we will likely fall somewhere in between the Federal Reserve outlook and the market's outlook. And although some of these supply chain issues most likely will take years to improve or fix, and something maybe as complex as, the uranium supply chain might take even longer than that, but that'll likely be fine because we're going to need a long time to even move to nuclear energy to actually get some solid infrastructure in. All right. I think we did a good job of covering that. I did a good job, I think. Let me know down in the comments. And so, Bitcoin. We got to talk about Bitcoin. So, it's behaving. It's been good. It's been trending with the market extremely closely. But today, market gap down. Bitcoin, being a good boy, who's not really needing his hand held by Mr. and Mrs. S&P. And I'm kind of liking that. I think that with a lot of these fears, a lot of mistrust in the government, if the sentiment is that they're not making good decisions, that they are showing signs of being a little incompetent with some things, this, I think, is good for Bitcoin. And as currencies start to collapse, like the Libra, which is Turkey's currency, that is also good for Bitcoin. And we're seeing more real estate in China also get downgraded, which is going to lead to economic issues there. We're seeing Russia want to ban Bitcoin. I actually think all of this good for Bitcoin. Because the banning is going to take a while to be considered a good thing. But it's going to be a good thing because as soon as someone actually tries to legitimately ban this and everyone realizes that it truly cannot be banned and that tracking down every single person that holds it is not going to be realistic in the slightest, as soon as people start to realize that, I think they'll realize how unstoppable it is, and then there'll be even more buying of it. Of course, that's not going to be like a straight exponential line, but of course, it was never going to be, and it will continue not to be. But I do think that we are entering into a new cycle. There's a lot more people who are coming who are becoming well studied on the technology and better understanding of the really intricate aspects of that went into the conceptualization, even down to the choosing of using an alias. So I think looking into 2022, when I'm thinking about the market, seeing all the bearish estimates, I'm thinking, okay, crypto's probably going to be the best because you have a set of innovation that's going to upset the entire financial industry. And then we look at some other innovative technologies. Biotechnology, it's looking really cheap. Seeing heavy volume, but holding support. I mean, lots in the market is holding. Some people are afraid of a crash, and at the same time, I've seen lots of support in different areas. And then when I'm even looking at the evaluations and kind of factoring in the growth, I mean, some of these companies actually look like great buys right now. And that's maybe a little soon to say, because we could very easily drop from here. So, but I have in the funds I manage, I don't have much cash left. I've been buying. If there's a market crash, I'll have to manage myself out of that. We have some puts, some nice insurance, of course, but I'm not actually too afraid of a market crash at this point. Could Biden eat Santa's cookies? Like I said earlier, he's got a speech tomorrow. He's gonna go over some of the budget. Let's actually look at that again. That was third quarter account status. I think he's also gonna make some comments on the virus, but he always makes comments on the virus. And maybe comment on the Build Back Better plan. If we hear more blaming and just continue arguing and nothing getting done, I think the markets could throw a little bit of a fit. And right now, all the politicians are super worried about inflation. They're calling it the number one concern. They're calling it the number one concern because the markets seems to be happy about them calling it the number one concern. If they're unable to get this stimulus together through the Build Back Better package, if they mishandle a virus that has, if they mishandle this virus in any way, and the stock market crashes, I think they're gonna switch their tune so fast. It's gonna be like a cartoon where they like just take off their mask. Like, ha! Surprise! I'm just here to print more money. Because inflation is the number one concern as so long as they think that it is the number one thing to get them reelected. But if stocks crash, companies will start out poor for CEOs, bonuses, and pay, since it's so tied to the stock market. If those go on a decline, they start cutting jobs, and then suddenly you have every excuse to print money again. This is why you cannot let the stock market crash. And this is why if the market crashes, then you can no longer raise interest rates, because then you don't meet your baseline parameters. So they're stuck in a loop where the only way out of it actually is to print money. And then, please fix supply chains. Please fix supply chains. Fix supply. I can't even say that quickly. Is that a tongue twister, or am I just a little tired? I'm doing these late, firing off a few videos. Then gotta do a few TikToks. And I need another cup of coffee. I think we've covered a lot in the episode. This one's getting a little long, so I'm probably going to call it here. And just looking into the rest of the week, we could see maybe some more negative news. I think they're eventually going to have to print more money. I don't think anyone's considering how fast their tune will change if there's an actual negative effects in the market. And heading into the end of the week, it looks like we're going to gap up. Micron had good earnings. And I'm thinking that we'll probably end up near all-time highs. But I'm no longer expecting some sort of insane rally unless just passive market control. Maybe a rally into Santa, Christmas. But then afterwards, I think we're just flat or down, and then heading into January, maybe we get a nice boost as people buy back in. Um, but we'll have to see on that as well. I think right now the thing that's playing out, and what we've reiterated in the Discord many times, is that markets tend to build on the momentum they have. So if they start to sell off, they really start to sell off. And then if they start to rally, they really start to rally. And then you get those big gap downs. And those gap downs, because market makers are managing their hedges against the massive amount of options trading that's occurring. So they're providing extra liquidity, but then they have to hedge themselves. They have to hedge themselves against the gamma. So, or well, against the delta with the gamma hedging. So those are all things to keep in mind. If any of that confused you, in the educational portion of the Discord, we have a what do I call it? Game of Squeeze section that you might want to look through. It's PDF that could help you better understand that and the market effect there. It probably also help you to go through the macro educational section and look through some of the macro theories. Because one of the things that we're seeing play out is also the dollar milkshake theory. But the dollar milkshake theory could easily be thrown off by the cryptocurrencies, which is something that I think is actually more likely at this point, especially since we're starting to see that strength kind of creep back into the cryptos, which is great for our contenders. If you're a contender, of course, you're seeing a lot of my trades, and you're seeing that I'm kind of getting a little antsy, wanting to set up for some stuff into next year. We're trying to practice some patience because we'd rather be late than wrong. Playing some stuff on the downside. Most of the bullish plays are consolidated to things related to crypto. So, and I said about 5 minutes ago I was going to end the video, so we're going to end it there. Heading into the end of the week, I'm thinking we could get a gap up tomorrow, but then we're going to be a little bit, slow to the draw on when Biden starts speaking. See what he's got to say. And then dig into the rest of the week because we've got some more, minor economic data. And, this passive market might just stay passive. It might just get a little melt up in the Santa. Or there could be a massive buyback of all the tech stuff as people, I would imagine right now everyone's loaded up on the puts. And I saw even today, we had 3 times the amount of puts as normal on SPY. Markets don't crash when everyone's hedged. Everyone's hedged. Everyone's scared. I'm seeing lots of people post about crashes. I'm not afraid of a crash. I actually think now that everyone's bearish, probably more likely to get a nice rally. So, or flat. Now, historically, flat or slightly down, but you usually do run up into Christmas. So, but things are so complex. Even though I'm feeling bullish on this week, I can't ignore the fact that I'm probably bearish by the end of the month. So, will the market kind of rally intraday or rally at the end of the day? Because we've been seeing that. We've been getting the U shape every day. We'll have to keep an eye out. Of course, I'm doing live call-outs in the Discord, and the main things I'm watching for: watch the bonds, watch the XY, dollar futures, and keep an eye on that volatility. If that volatility is building up and the market's mostly flat, and then it starts to break through, those breakouts to the upside are pretty big. So you get that breakout because the volatility is high, it gets a bunch of momentum. Then what happens? Market makers come through. They sell into that incoming rally. You get that gap down. That gap down is your nice big breath. Then you hop in your calls as it comes down. Maybe they bleed a little bit at first, but then you wait for that rally to come back up. And I mean, we have some members in the Discord. It's 25%, 25%, 25%, 30%, 40%, 50%. You could scalp this type of movements fairly well if you like scalping. And you can also get blown out on them. So don't think it's free money. Nothing's free. Market will eat your lunch. But just throwing that out there. Hopefully you found this episode helpful. And I am going to get a big cup of coffee and work up towards writing some more research to the Discord. And I will see you on another episode tomorrow because we've got lots more to talk about.